In an amazing turn of events, the world's richest man, Elon Musk, has taken a U-turn and once again offered to purchase Twitter for $54.20 per share. In response, the social media company has responded by releasing a statement confirming that it has indeed received the letter and plans to complete the acquisition. Watch the video till the end as we tell you the details about Elon buying Twitter, what changes he's going to make to the social media platform, and how he will afford this deal. How it happened. It so happened that just a few weeks after agreeing to buy Twitter at $44 billion, Musk tried to back out of the deal and officially notified Twitter in July of his intentions to terminate the agreement. Following this, Twitter sued Musk to compel him to complete the acquisition by filing a case in the Delaware Chancery Court, which was scheduled to hold the trial between the two parties on October 17th. The reason behind Musk breaking the agreement was the fact that Twitter was overstating the amount of bots present on its platform. Musk, along with his attorneys, asserted that the social media company misled investors by including fictitious figures in its Securities and Exchange Commission corporate filings. Twitter argued back, saying Musk's claims of fraud were false and based on an erroneous understanding of how the firm counts bots and phony accounts on its network. Twitter further claimed Musk was searching for an excuse to back out of the agreement when the company's shares fell along with the broader downturn in the market. The trial and Musk's offer. With back-and-forth allegations by both parties, Musk requested a postponement of the trial, but Delaware Court Chancellor Kathleen McCormick denied him, citing the possibility of irreparable damage to Twitter. However, the Chancellor did give Musk and his legal team the permission to modify their counterclaim to include specific allegations made by Twitter's former head of security in a separate whistleblower lawsuit against the company. After taking a long, hard look, Musk finally listened to his lawyers and volunteered to move forward with a plan to buy Twitter at the price he proposed months ago before attempting to call it off. This has proved to be an astonishing change given how close the two parties were to going to trial. In a letter addressed to Twitter, Musk has offered to proceed with the transaction for $54.20 per share, provided the Delaware Chancery Court would agree to issue an immediate stay of the lawsuit and adjourn the trial and all other relevant processes. Following this, Twitter said in a statement of their own that it had received the letter and intended to complete the deal at the initial share price proposed by Musk's group. Consequently, the court convened an urgent hearing with both parties. As the sources have suggested, Twitter has asked for assurances from the court that it would oversee the proceedings before agreeing to Musk's offer to withdraw the complaint due to the mistrust that has been established between the two parties. The trial and its impact. Musk's offer comes at a crucial juncture in the proceedings leading up to the trial, which was expected to end months of legal disputes between the billionaire and the social media business. According to court schedules, Musk's side gathered testimony from Twitter CEO Parag Agrawal and whistleblower Peter Zatko, the company's former head of security, who claimed severe flaws in Twitter's security standards and errors in its filings with security regulators. According to two people who were briefed on Zatko's sworn interviews, they did not yield any insights that would have aided Musk's attempt to withdraw from the agreement without paying a substantial expense. According to legal experts, Musk's eagerness to reach an agreement shows that he may have realized that his position heading into the trial and his deposition was weaker than he intended it to be. Despite the initial surprise surrounding Musk's desire to acquire Twitter, one factor that led to his decision-making became more apparent in text messages that were recently made public by court documents: his growing annoyance with what he perceived as content moderation decisions infringement on free speech. This was evident by his comments at a May event in which he declared that the ban on the former president Donald Trump was a morally poor choice and that he would lift it as soon as he takes over the social media giant. Just so you know, Trump was permanently blocked by Twitter following the uprising on January 6, 2021. The text exchanges also revealed that Jack Dorsey, the co-founder and former CEO of Twitter, was one of Musk's biggest advocates during the process and frequently disagreed with the board, which was always trying to comprehend Musk and his intentions. The messages show a select group of people, celebrities, prominent financiers, and media moguls who advised Musk on the acquisition, suggested candidates for hiring purposes, and people who occasionally pushed him to reinstate right-wingers who had been banned from Twitter. The layoff. As part of his agreement to acquire Twitter, Elon Musk informed potential investors that he intends to lay off up to 75% of the social media company's workforce. The timing of Musk's aspirations, should he end up taking over the company, is bad news for Twitter employees. As in July, the business declared that it had reduced hiring due to a general economic slowdown in the tech sector, where numerous businesses had recently announced hiring freezes and layoffs. Interestingly enough, leaked documents have revealed that comprehensive preparations to force out people and reduce infrastructure expenses were already in place, even before Musk attempted to buy the company. Musk has hinted that he is planning to slash Twitter's 7,500 employees down to a skeleton staff of roughly 2,000 individuals. These layoffs will likely have an effect on Twitter's daily operations, particularly its capacity to police offensive content and address security issues. Paying for the deal. As far as paying for the deal is concerned, Musk is the richest person in the world, yet a significant chunk of his wealth is dependent on his ownership of Tesla and SpaceX. Musk reportedly has roughly $20 billion in cash after selling his shares in Tesla in November and December of last year and in April and August of this year. This indicates that even if the other equity and debt obligations are honored, he would still need to raise an extra $2 to $3 billion. Despite his claim in August that he does not want to sell down his position in Tesla any further, the U-turn by Musk has rekindled questions over whether he will sell more of the electric vehicle maker's stock to fund the deal. On that note, we will end today's video. We hope you enjoyed the content of the video. If you did, show some love and hit that like button, and don't forget to subscribe to our channel so that you never miss out on any of the amazing videos we have in store for you.